So this is part 22 of this multi-part video series for positional stock traders. So some of my YouTube subscribers have appreciated this video series. They like it very much and they have already started sending me queries. So this is a subscriber query which I want to address, and this is a positional trading nuance that you need to know. And I think this question is very apt and very timely. So one of my YouTube subscribers, his name is Sumantra Boxy from Kolkata, and very hardworking, disciplined person, regularly keeps in touch with me, keeps studying hard, keeps asking me questions. So this is what he's asking. He's saying, what if the stock breaks out of the blue shaded area and I don't get a chance to buy? However, it pulls back to the blue shaded area. Can I buy the stock now? Now, first, let me explain the first part of the question. What if the stock breaks out of the blue shaded area and I don't get a chance to buy? Why will this happen? See, the blue shaded area is the 5% buying zone from the pivot point. Now, when the stock is breaking out from that blue zone, probably at that time when it is breaking out, maybe the relative strength of the stock is less than 70. Maybe the institutional demand is C, it's not A or B. Maybe the industry group rank is beyond 100. So there could be any reason why the stock does not show up in our filtered list, right? However, after some time, it begins to show up in our filtered list because market conditions change and the ratings and the parameters change. Okay, maybe the market falls, but the stock does not fall as much as the market falls. So the relative strength suddenly shoots up, right? Because if the market is falling hard and if the stock is not falling, instead it is stabilizing, that's called relative strength, correct? So for any reason, the stock could now show up in our filter after it has already broken out of the blue shaded area. Now, if it pulls back to the blue shaded area, can I buy the stock now? So let us look at this visually. Okay. So let me open. Yeah. So I go to Market Smith. We go to product support, that same page. Yeah, see, this is the blue shaded area. So let's say the stock breaks out of that area and for some reason it doesn't show up in our filter. So we miss the chance. But then what Sumantra is saying is that if the stock comes back to the blue shaded area in 2-3 weeks, so here it is showing 22% from pivot in 11 weeks. So in 11 weeks, the stock has shot up 22%. It's in the selling zone. But what if it says 3% in 3 weeks? Okay, so the stock goes up, comes down. So it's now 3% above the pivot point, but it has taken 3 weeks for that to happen. Okay, so now that it is inside the blue zone, the second part of the question is, however, it pulls back to the blue shaded area, can I buy the stock now? Now, coming back to this question is very important question. That's why I'm discussing this. Okay, so now it pulls back to the blue shaded area. Should you buy the stock or not? Now, this is a very important concept. I think I teach this in my video course as well. I don't remember now. But if you look at this question, can I buy the stock now? That's a binary kind of a question. The answer to that question can either be yes or it could be no. Okay. That is not the correct approach to professional stock market trading. Lot of traders make this mistake. They look at the criteria, the comparative, technical, fundamental, market, liquidity, all of it, and then they ask the question, should I buy the stock? Okay. That has only yes or no answer. I don't approach the stock market this way. My approach is, after I look at the liquidity, comparative, technical, fundamental, and the market, I ask myself, what is the correct position size in this stock, assuming I am buying the stock, or what is the risk that this stock is presenting to me. See, every stock is like, it's like on a plate, risk is being presented to me when I'm looking at a stock. Just like you go to a restaurant and they present you the dish, okay, to eat. Similarly, when I look at a stock, it's like somebody, the market is presenting to me the dish, and in that dish, there is risk. Okay, so I try to assess how much risk there is in the stock. I never ask myself, can I buy the stock now? This is a very, very different approach to professional stock market uh, trading. Okay, very, very interesting approach, because whenever you are looking at a stock which meets your criteria, you by default assume that you are going to buy. The only question is what position size. Now, sometimes the position size could be zero, which means I'm not buying the stock. Okay, so it's not a yes no question for me. For me, it is about how much risk is being presented to me. Okay. So my question is how much risk there is in the stock, and accordingly, I will take the position size. And if I see a lot of risk factors piling up, my position size is going to be 0%, which means I'm not going to buy the stock. So when you ask, can I buy the stock now? That has only two answers, yes or no. But when you ask how much risk there is in this stock, you have multiple options that open up for you: 0% position size, 20% position size, 5% position size, 10% position size, 8% position size, anything. You decide how much risk you want to take. Okay. Moreover, not just position size, you could choose to take a high position size with a very tight stop loss, like 20% position size with a 2% stop loss. So your net loss could be 0.4% only of the total portfolio. So it opens up a lot of options for you. One question is restricting you to yes or no. Another question is opening you to a lot of options. So please use that approach. Never ask me, should I buy the stock or not? That is not the correct question. That is not professional trading. Okay. The correct question is how much risk there is in the stock, and does the stock deserve our time? Now, given this context, you tell me a stock has broken out of the blue zone. In 3 weeks, it comes back to the blue shaded area. What does that tell you about risk? Let's try to understand the risk in this situation. Now, in 3 weeks, the stock should have gone up closer to our selling range, right? Sometimes what happens is the stock breaks out, goes up 10-15%, maybe consolidates, takes rest for 1 or 2 weeks, and then goes up and reaches the selling zone, the green selling zone. Ideally, that should have happened, right? At least it should have gone up above and stayed above the uh, buying range, the blue shaded area, for some time. Rather than doing that, the stock has beginning to pull back, which means it could continue to go down and break the uh, 10-week simple moving average, that blue line. Okay, which means what? The risk in the stock has gone up, right? If the stock goes up and pulls back to the blue shaded area instead of going up, which is what we expect the stock to do, then there is risk in the stock. Now, if the risk factor has increased, how can you control risk? I've already taught you there are three ways to manage risk. Number one, go in with a small position size. Number two, keep a tight stop loss. Number three, you can do both. Go in with a small position size with a tight stop loss. So if you look at this stock, which has pulled back to the blue shaded area, and then you look at the liquidity, the comparative, the technical, the fundamental, and the market conditions. After looking at these five kinds of analysis, you will understand what risk there is in the stock. Okay. If fundamentally, let's say we have 12 different criteria, out of 12, only 6 or 7 are in our favor. That means there is also some additional risk. So, number one, the risk is coming from the stock pulling back to the blue shaded area. Number two, there is risk coming from fundamental factors. Instead of 9 or 10 factors in our favor, we only have maybe 6 or 5 or 7 in our favor, not advisable. If you look at the technicals, maybe the stock is in base number 4 or base number 5. That's additional risk. So, as the risk factors begin to pile up, moreover, if you look at market conditions, instead of confirmed uptrend, it is showing uptrend under pressure or rally attempt. So, that's fourth factor that is influencing risk. So more the number of factors that begin to pile up, more the number of risk factors that begin to pile up, the lesser will be your inclination to buy the stock, or the lesser will be your inclination to hold a big position in the stock. You might still choose to buy the stock, but your position size is going to be small. Remember the basic golden rule: higher the risk, lesser the position size; lower the risk, higher the position size. Now you decide what is normal position size for you. So let's say for me, normal position size could be 10%. So if I want to take a half position, I will buy 5% position size in the stock. So I'll put 5% of my portfolio in the stock to control my risk. If I'm still afraid, if there are too many risk factors piling up, instead of 5 to 8% stop loss, I might keep 2 to 4% stop loss with a 5% position size. So you understand how many options open up for you. Okay. So the right question is not, can I buy the stock now? That only gives you a binary outcome, yes or no. The right question is how much risk there is in the stock. Now, if the stock pulls back to the blue shaded area, right, then you have to check out of 12 fundamental criteria, how many are in our favor. You have to check what's the market condition. Is it confirmed uptrend, or is it uptrend under pressure or rally attempt, or is it downtrend? In technicals, check the base. Check whether there is blue dot on the relative strength line. If there is no blue dot on the relative strength line, there is more risk. If the base count is 4 or 5, there is more risk. Check the comparatives. If the stock is not a market leader, maybe it comes at number 4 or number 5 in terms of market capitalization, another risk factor. Maybe the industry group rank is more than 40, right? Another risk factor. So, more the number of risk factors that pile up, the lesser inclined you will be to buy the stock. Okay. And just to be conservative, stay away from such stocks is very simple. Why to buy a stock that has pulled back to the blue shaded area when you know that there is risk? That is the extra conservative approach. But if you want to take risk, take a calculated risk. Okay. So I thank my dear subscriber Sumantra for asking this question, because this question was important for all of you to understand and think about. Never ask, can I buy the stock now? Okay. Always ask how much risk there is in the stock. Does it deserve my time? Okay. How much position size should I take in this stock if I were to buy the stock? Okay. I will see you in the next part. Keep sending me questions.